Welcome to the second module of this course, or the second lecture, where I speak about the first concept highlighted in the overview of this course, and that concept is called the RSI, or rather the Relative Strength Index. The way that I'm going to explain this to you, I'm going to first highlight and outline what the RSI is, just so you can have a rough understanding of what it is. But the most important thing that I will do is to show you through examples on the chart of how the RSI works and how to best use it. So let's get into the next slide so you can get a greater perspective and understanding of the RSI. Understanding the RSI. The Relative Strength Index, or RSI, is an oscillator that shows periods of overbought and oversold markets. It is also used to determine reversal points from dynamic support and resistance. An RSI period of 3 is what we will be using in this trading strategy. Once the market is overbought or oversold, we will begin to look for trading opportunities. So the number one thing that we're doing, since we're on the MT4 platform now, we have to open the chart. So we go right click, chart window, it comes as the 1 hour time frame. Just follow these steps. You don't have to understand the stuff, just follow these steps. We zoom in. As you can see, when it's zoomed in, it's showing these bars. So what we have to do is change the chart to Japanese candlesticks, this icon here that says candlesticks. We right click, we click on grid to take out the grid, and now what we have to do is change the color of the candlesticks. We want green and red candlesticks. Bar up is lime, bar down is red, bull candle is green, which is lime, bear candle has to be red. And then we change and we add the period separators to separate the days. Now the next thing that you see here is that each candlestick represents 1 hour, and we do not trade on the 1 hour time frame. So to change this, you have to go here to M5. Usually it'll be somewhere here. So you go to M5, you click that, and as you can see now, every single candlestick represents 5 minutes. This is the current price movement here. Now the next thing we have to do is add the RSI, so I can actually explain to you how it works. So you click on insert, go to indicators, you go to oscillators, and then you go to relative strength index, as you can see here. Click on that, and the default that comes with the RSI, the default is 14 and it's blue. What we will do, we will change the period, as you saw in the previous video. We're going to change the period to 3, and we're going to make it aqua, blue. And then the levels have to change. First level is 20, the next level is 50, and then you click add for another level, and the next level is 80. They're going to come as a dotted line, the levels, because these are the levels, and here we will make it brown. On the 20, because that's the one at the bottom, we're going to type in oversold, and then on the 80 we type in overbought. Click OK, and here's the RSI. Now this is how we see that the market is overbought or oversold. As you can see here, this is the overbought line, meaning that the buyers were buying the market and it kept going up till it crossed this line here, which is the overbought line, and when the market goes down, it crossed here at the oversold line. So with the first part of the strategy, which is the RSI, we look for areas that are overbought and areas that are oversold. This can be considered as an area that is overbought. This is considered as an area that's oversold. So long as it touches the top, which is the overbought, or touches the bottom, which is oversold, this can also be considered as oversold. Anything that touches or crosses the line, that is considered as overbought or oversold. A great example of this, if you can see, as I said, the RSI shows dynamic support and resistance. For instance, this is resistance, as in it has touched the top and there's no way that it's going back down. There's no way that it's going back up. This is resistance. The market couldn't get any higher. Here the market went down, as you can see here on the chart, and this is support. But basically we do not talk about it in the sense of support and resistance. All we need to know for this strategy is overbought and oversold. We do not need to pay attention to we do not have to pay attention to support and resistance. So yes, as you can see here in the current market, this is overbought. So we're gonna move on to the next video, and I'll check you out there. Welcome to the third module of this course, or the third lecture, where I speak about the second concept, which is, as you can see on the screen, the moving averages. By this time, you actually understand what RSIs are and how to use them in the strategy, or at least have a rough understanding of what they are. And I've given you examples on the charts of how to set up your charts and how to use them. So now we're going to move on to the moving averages. And we're going to move on to the next slide, where I explain what moving averages are, where I give you a great understanding of what they are, and then I'll give you examples in the next video. So let's move on to the next slide. Understanding moving averages. A moving average is a lagging indicator that represents the movement of price over a specified period. If you have a 15-period moving average on the 1-minute time frame, that same moving average is showing the average movement of price over the past 15 candles on the 1-minute chart. They are also referred to as dynamic forms of support and resistance on the chart. There are different types of moving averages, for example, simple SMA, weighted WMA, exponential EMA, etc., etc. With this strategy, we will be using two simple moving averages, SMAs, period 5, which will be orange, and period 15, which will be blue. In the next video, I'll explain how to put it up on the chart and how to use them. So now we're going to go into this next concept, the moving averages. It's a simple thing with installing and uploading the moving averages. You go to Insert, Indicators, Trend, Moving Average, and the way that it would come, the default setting would be 14, red. But what we will do, we're going to first start with the 5 period. We make it orange, or we make it a little bit thick. Then we click OK. As you can see, here it is here. Now it's time to upload the second one. Same thing, indicators, trend, moving average. And this one is 15, and we make it blue, aqua. Then we click OK. These are the moving averages. As you can see, price respects moving averages as a form of dynamic support and resistance, just like the RSI. When the moving average points down, for instance on the period 5, This means that over the past 5 candles, this is the average direction that the market is moving in. And of course, for the 15, it means over the past 15 candles, this is the general movement of the market. But we are not trading with the movement of the market in accordance to the moving average. No, we will be trading crossovers, just like over here and here and here. But stay tuned, because very soon I'll explain how to combine the RSI and the moving average. So that's about it. Check you out in another video.